Welcome back, and in our top business story, as we saw earlier, the UAE and India have agreed to implement a number of action plans by June this year, with the aim of expanding bilateral trade by 60% over the next 5 years. In a joint statement issued upon the conclusion of the 3-day visit of His Highness Sheikh Mohammed bin Zayed Al Nahyan, the Crown Prince of Abu Dhabi and the Deputy Supreme Commander of the UAE Armed Forces, the UAE and India agreed that they must continue to cooperate closely to expand mutual trade and economic opportunities, and also leverage the strategic bonds that exist between both countries. His Highness Sheikh Mohammed bin Zayed and the Indian Prime Minister stated that the action plans would focus on identification of potential sectors and the impending tariff and non-tariff barriers, exploring opportunities in the services sector and formulating a sector-specific strategy to boost two-way trade and investments. Along with the UAE's commitment to invest in India's energy, power generation and transmission and defence needs, His Highness Sheikh Mohammed bin Zayed and Prime Minister Modi also reviewed the progress in realising the $75 billion target for UAE investments in India's plans for expansion of next-generation infrastructure development. While India is ranked second in terms of the value of foreign direct investment in the UAE, and the UAE is the largest investor in India from the Arab world, bilateral trade between both countries accounted for $49.729 billion during 2015 to 2016. And this year they aim to increase bilateral trade by 60% to $100 billion by 2020. While business confidence registered a relative decline in the UAE last year, leading financial experts at IMA highlighted that conditions are expected to improve this year, as the UAE has the ability to quickly adjust to low oil revenues and overcome economic challenges. According to the latest Global Economic Conditions Survey results by the Association of Chartered Certified Accountants and the Institute of Management Accountants, business confidence in the UAE dropped to negative 23.7 in the last quarter of 2016. That's compared to 41.8 in the first quarter of 2014, while subdued employment conditions have put a dampener on the optimism of businesses in the UAE. Officials have stressed that austerity is expected to ease this year. New survey results also showed that the prospect of the 2020 World Expo and Iran's improving relationship with global trade offer encouragement for future investment. The report noted that the UAE government expenditure index has been rising to its highest level since the third quarter of 2015. And although the economy has been hit hard by the decline in oil prices, the economy has managed the adjustment to lower oil prices faster than any other country in the region. Almost 44% of respondents surveyed expressed concern over falling incomes due to low levels of government expenditure, with another 43% reporting worsening business confidence. The final Global Economic Conditions Survey for 2016 was completed by over 4,500 finance professionals and business leaders worldwide during November and December 2016.
The economic survey results reflect globally what has been going on with the commodity pricing over the last year and a half. Obviously, this has a direct impact to primary commodity producers like the UAE, and it highlights and casts a spotlight on places where the UAE, as well as the entire Middle East region, can make greater investment in its infrastructure, in its education, and in continue to diversify its economy. Through associations like the IMA, through international finance associations, the UAE can continue to reach out to international capital and labor markets to continue diversifying based on their intellectual property, their knowledge industries, as well as the competencies that they can bring to the local economy. And through those efforts, you will continue to use those international networks to continue creating educational opportunities for the local citizens alike, allowing the local economy and the local citizens to continue to flourish.
Dubai Middle East has introduced 6 million dirhams in unique and premium temporary event structures to the Dubai market. That's off the back of increasing demand and a rise in event numbers. Dubai residents and event goers can be some of the most demanding in the world, that's according to officials, with high expectations of 5-star premium event and temporary facilities. With a hugely competitive event industry, organisers and companies are doing everything in their power to stand out with the latest kind of temporary structures for their exhibitions. Customers and visitors are continuously wanting more, and De Boer Middle East, one of the world's largest event tent and temporary structure suppliers, has responded to this need and the overall growing confidence in the event industry sector. Some of these next-generation event structures are unique, circular in shape, and contain vast open mezzanine floors, and are climate-controlled and high-spec to cope with Middle Eastern climates.
We've bought another 6 million on top of our existing stock here, so this is a growth move, and we've bought some of our specialist stuff, oval and round glass structures, double-story structures, things that are really catering to people who are saying, you know what, I want to do something different, and really that's just based on the continued growth of events here. The run-up, as I say, to Expo 2020 and elsewhere, the World Cup of football, etc., is leading to a growth in demand. But more than that, less people want the cheap, soft-sided marquee that's all a bit wonky, and more people are taking events seriously and really want to do something that stands out and different. People across the world who run premium, top-class events, and their customers and their visitors, they don't want to go in a normal tent anymore. They want to be in a two-story, insulated feeling, permanent-looking building. And that's really what De Boer does and specializes in, is the higher-end buildings. Obviously, technology's moved on in the last 10, 15 years, and now the kind of buildings we're building for a temporary basis, for an event, or even for something more medium-term, they look permanent, they feel permanent, they have the same kind of insulation values as a permanent building, and really that's the way the world's going for major events and for really serious event organisers.
With the Dubai Expo 2020 just around the corner, officials added that the event will be a great showcase for temporary structures, with organisers already looking at the most innovative displays, incorporating solar power and smart thinking.
Well, I think Expo is going to be fantastic as a showcase for temporary structures. You're going to see these pavilions that countries do are totally unique, totally bespoke, and something that you just won't see anywhere else. Often they're built on the concept of the same modular systems that De Boer and the likes of us have, but they're, each one is totally bespoke and unique, and it's going to be fantastic. But behind that, there's probably another 5 packages of overlay that are going to be deployed across the city, and there you're going to see people really pushing for innovation. What are you going to do to power this structure? Are you going to have solar panels woven into the roof line? That's an innovation we're looking at. What are you going to do in terms of keeping the fuel bills down? What are you going to do in terms of sustainability? So again, the insulation of these buildings is going to be looked at. You're going to see real smart thinkers, and they've already started thinking at Expo 2020, and I've met with the team there myself, about, okay, what can we do that's different? What's going to stand out? What's going to be really efficient and smart for us at a mega event like this? And you're going to see a lot of deployment of some of the best thinking at that event.
Residential property prices are more than 13% lower than their peak in 2014. That's according to the latest report by real estate consultancy ValueStrat. The fourth quarter report showed that the monthly growth rate of residential values in Dubai has been stable for the past 18 months. It was quoted in the report that a slight decrease in quarterly residential sales prices, coupled with a jump in overall quarterly transaction volumes, indicates a possible cyclical soft recovery stage for the residential market during the months to come. The ValueStrat price index for Q4 of 2016 showed an overall 0.5% annual decline in values, the equivalent to prices being 13.7% below their 2014 peak. Officials added that after a quiet third quarter, citywide residential sales transaction volumes witnessed an estimated quarterly jump of 35% for apartments and 22% for villas, and transacted sales prices were 4.2% higher than the second quarter. Exceptions to the trend were seen with increased median asking rents in prime locations such as Jumeirah Beach Residence, the Palm Jumeirah and Emirates Hills. The report estimated that the total supply of residential apartments and villas in 2016 amounted to 11,000 units, representing 33% of the initial estimate at the start of the year. 2017's pipeline is expected to have 75% of its residential supply in the mid-affordable locations of Dubai Silicon Oasis, Dubai Land, Jumeirah Village Circle, Al Quoz, Dubai Sports City, International City, Production City and Al Fajjan.